Reserve education program, teaching about economics topics in your classroom, or exploring careers in economics with your students. Robin and I will field your questions and moderate today's session with Chair Powell. During the next hour, we hope to provide insights into the Federal Reserve's goals and activities to support your work as you teach students how the decisions made by the central bank can affect all of us, your students, their families, and their communities. Today, we are honored to bring you Federal Reserve Chair Jerome Powell. Jerome H. Powell first took office as chair of the Board of Governors of the Federal Reserve System on February 5th, 2018, for a 4-year term. He was reappointed to the office and sworn in for a second 4-year term on May 23rd, 2022. He also serves as chairman of the Federal Open Market Committee. Chair Powell was born in February 1953 in Washington, D.C. He received an AB in politics from Princeton University in 1975.
All right, who cares? We're not listening to Jerome Powell's, what he's done. Let's do a little refresh. We did get the market bounce. And if there's too much noise in the background for you on TikTok, go ahead and jump over to YouTube. The mic is pretty clear. He's just going to open up really quick. Let's do a market refresh really quick. What did we have? So we got GDP right in line. That's exactly what the market wanted to see, right? Nothing too much to the upside, not too much to the downside, right? No surprises, up or down, right in line. GDP is in line, market bounces. Macro forces, oil cools down, bond yields cool down, the dollar cools down, market bounces. You get salary exhaustion, right? The salaries are exhausted. Shadow QE still online, higher rates. There's a narrative out there that higher rates are actually going to fund growth for the highly efficient mega cap tech companies who can actually earn. PC data tomorrow, consumer report. Let's go ahead and listen to what Powell has to say, and then we'll go over the charts.
And I all thank you. And that crisis in many ways continues as research confirms the educational deficits that students still suffer from the pandemic. In addition to the challenges they face, there are likely to be consequences for the economy and for society in a generation of young people who may lack some of what they need to be well-informed and engaged participants in our economy and in our democracy. Addressing this legacy of the pandemic is a major public policy challenge. So now, more than ever, teachers are crucial to America's future. A large majority of you are economic educators, a role that is of particular importance. As many of you know, the Fed's ability to influence the economy depends to some extent on influencing the public's view of current and future economic conditions. When my colleagues and I publish our projections of the most likely path for the economy and interest rates, as we did a couple of weeks ago, one of our goals is to influence spending and investment decisions today and in the months ahead. That will only be the case if people understand generally what we're saying and what it means for their own finances. So by educating students about economics, not only are you providing them with valuable skills to manage their finances and improve their chances for future success in any number of occupations, you're also giving them the knowledge that they need to understand the macroeconomy, including the implications of the decisions that we make around this table here at the Fed. Economic educators impart knowledge that's instrumental in how we promote a healthy economy, and in a way, when you teach students, you're also helping us conduct monetary policy. But you do so much more than that. Teachers illuminate the world for us. You help us to see the limitless possibilities in life, and as much as that, in ourselves. At a wonderful but also very vulnerable time in each of our lives, teachers like you are there to help us understand the world, especially when it's hard to understand. I will leave you with one of the many personal examples I could cite from my time in school. I can still very clearly remember a November day in 5th grade at Blessed Sacrament School up near Chevy Chase Circle, Washington, D.C. My teacher, Mrs. Keller, who was much beloved by all of us, and by me, was called away from class. When she returned to the room, every student was upset and horrified to see her tears. And then we got the news. It was November 2nd, Kennedy had been shot and killed. So this was something.
Okay, bro, what the hell is Jerome Powell talking about? Oh my God, I don't care about this. I want to hear some questions. Either way, let's see what he has to say. First, let's take a look at the charts. This dude ain't talking about nothing yet. Let's just go through what we're seeing here. All right. So we do this morning, like I said, look at the market wants to see the macroeconomic data come in as expected. Too much to the upside might warrant another rate hike. Too much to the downside might warrant a recession. So the market wants to see that in line. We got that today. GDP, like I said before. And I think first you start with the yields. Look, 2-year yields are not moving, right? Why? Because the reverse repo facility is eating up these treasuries. It's not a risk today, right? 5-year. 5 years, kind of, they're not up too much. 10 years still breaking out, but it did ease, right? Positive. 30-year breaking out, but it is easing a little bit, right? TLT finally caught a bid. That thing could probably keep getting smashed. Dollar slowed down. Now, we want this continuation to the downside. If this continues up, it's going to be more of a headwind for the U.S. stocks. For crypto, actually, crypto hasn't really been responding to the dollar as much. Gold getting smashed, nobody cares. Oil, you definitely want oil to chill out a little bit. These are the macro forces: bond yields, dollar, oil. Those are the main forces that we want to see ease for the market to bounce. And we already know, looking at S&P, it's been oversold. What do we say? It's oversold. Okay, the sellers are exhausted. There's going to be a bounce, but can we get a sustainable bounce? Can this bounce take us to a higher low? Can we get an actual higher low here? I think we need to get above. I mean, there's a couple levels we need to get above. Let's not get too over our skis. I think we need to get above 4,300. Make it easy on the SPY. We need to get above the previous support that we dropped, 431 at some point. Maybe after today's speech, Powell might say something, right? But we're in after hours, so the market's not going to move, obviously. But what you do need to watch is tomorrow, that data that comes out tomorrow, which is going to be personal consumption. Or no, I'm sorry, not personal consumption. The consumer report, right? Is the consumer overspending still? Not good. Is the consumer savings rate falling? The market actually might like that. And also, what is the PCE, right? The Fed's preferred inflation gauge is PCE. It is not, yeah, Chainlink's on fire. The Fed's preferred inflation gauge is not really CPI. It's not really core CPI. It's, you look at it, but it's core PCE, which excludes oil. They're looking through oil. We got Goolsby today, one of the Fed chairmen, saying, hey, we don't care about oil. Saying, hey, we might be able to pull this off, right? We had some positivity there. And right now we got S&P bouncing. If you look at the Qs, same thing. You got the Qs bouncing, but even better, the Qs from a technical perspective actually look better. They're right on Q, right? Oh, Qs right on Q. No, I'm just kidding. So the Qs are right on Q, as in the downtrend, right? The flag pattern, the bullish flag pattern that we're seeing form, it's bouncing right off that trend. There are buyers stepping into the Qs because this is a stock pickers market. That's where we're at now. We're at a stock pickers market. Yes, oil's up. Who cares? It's going to slow the consumer anyway, but you have fiscal policy. You still have government spending inside of these B2B businesses, mostly Amazon, Apple, Google, Facebook, Tesla, right? And they're receiving stimulus checks essentially from the government. And so the Qs are probably going to start outrunning everything. You also got a bid on IWM today. I mean, it's not that significant, but you had market breadth step in to some degree, right? Now, how many stocks going above the 50-day moving average? Maybe it stopped. Who knows? We'll see. Tomorrow's data is going to be the main determinant to that. Okay, look over here. You get an Ethereum possible ETF stepping in. Ethereum starting to move up. Still in that downtrend. This could be a gigantic, blow off top. Breaking out of this bullish flag pattern. You got Chainlink just surging before the actual conference. Tokenization, that is the catalyst there, right? And you have Tesla over here still holding that 240 level that we talked about, still holding the 240 level. I know I got this marked up, but Tesla also has a catalyst. Maybe it already priced in production falling to some degree. Keep that in mind. That's a log chart. Let's take this off. Let's just keep that log on there. So hey, this one looks a little different than the one I had pulled up on this side. Let me see. What is this? Oh, check this out. So this is Tesla. If we look at a triangle chart, let me see if Powell's saying anything significant. We're an independent agency. He's still talking politics. I want to hear him get to inflation. He's still talking politics. You guys over there on, let me know if it's too loud, the background on TikTok, and then I'll move you over to, we'll just move over to YouTube. So Tesla still forming this very bullish, right? Very bullish wedge pattern, trending higher, right up on the trend. Starting to look good. So those are the assets I look at, obviously. Again, S&P is looking pretty good here. We just need these macro forces to ease off. I did hear that the SPR got refilled a little bit I don't know what that means. I don't know if it's significant, but we do have the VIX coming off that 20 level, right? Didn't even get to 20. VIX coming back down. Maybe that was it. Really, tomorrow's going to be the day whether we see if that continues or not. Vol for also for the Q's down. Move index. Here's the big warning shot though. Bond volatility is still climbing. There is concerns about liquidity in the bond market, which reduces liquidity. The positive, China is pumping liquidity again. China liquidity went up. You can see it on my Twitter. I'll pull that a little later. Put to call ratio, is it up there? Is it really big? No, not really. It's coming down. It peaked though yesterday, right? So if this is the peak, which we'll find out tomorrow, tomorrow's a big data. If this is the peak in the put to call ratio, that's always bullish, right? And everybody is extremely bearish. We'll see in the AII, the Bank of America AII survey, everybody's extremely bearish there. And I'll pull those out too once Powell, see if Powell is saying anything. Okay. Yeah, he might be just talking economy. Let's see. His tone is going to be important here. Let's go back to Powell. And then let me see. Chainlink is on fire. Moves upside strongly. We still need to break out of like 850 for Chainlink. But yes, it is moving up. The rubber band stretched to its limit, as we discussed yesterday. Exactly. So we're pulling back. Can we sustain this level is the question. Can the S&P sustain this level, which is going to sustain confidence in tech, which is going to sustain confidence in crypto, which is going to put risk back on the table? Can we get bond yields easing? I don't know. Can the dollar ease? I don't know. We'll see. We're keeping track of the macro forces. This could be the top. If it is the top, if this is the top of the macro forces, if they've finished easing, this is your next entry point, right? If you're not in yet, this is where the fund managers are stepping in, and they're going to get long S&P. They're going to get long markets regardless. And I still think the Magnificent Seven are going to outperform. We got AMD exploding today. Also, check this chart out. AMD with the big upside move. This was a big move for AMD. I'm not saying go jump into it, but this thing has been forming for a while. Very oversold. I know if you're a technical trader, you're watching this. AMD, big breakout. Nvidia, looking pretty good also, right? I still like Tesla. The catalyst for Tesla are going to be amazing going forward. So let's get back to Powell. I think that's it. And then, yeah, let's see what he's saying. And then we'll jump in. Are you bullish for Chainlink? 100%. You got to go watch our Chainlink video. Very bullish for Chainlink. Quadrillions of dollars to be transacted through CCIP into the future. Let's go. All right. Let's get back to that broadcast. See what this dude's talking about.
Like we need to be in a democracy. So that's the other way that we fit into the government.
Thank you. That's interesting. Our next question comes from Ashley Wagner, a social studies teacher at Oak Ridge High School in Oak Ridge, Tennessee. Ashley?
Hello, Chairman Powell. Thank you so much for this opportunity. My question is, what is a common misconception about the Federal Reserve or your position that you'd like to clear up or share with high school students?
Interesting. Thanks for your question.
Oh my God.
The truth is, central banking is kind of not on the main highway of what most people think about in their lives. So many people have only, and they have no reason really to carefully follow how the Fed is structured or anything like that. So there are a lot of misconceptions, I would say, generally. But if I were going to give one, it is this, that people generally don't, and they really don't need to walk around with this, but they don't really understand what the Fed is, how it's structured. So just briefly, it's really two pieces. There's a board of governors here in Washington, which is a government agency. Each of us, myself and my 6 other governors, are all nominated by the president who's in office at that time and are confirmed by the Senate. We serve these 14-year terms that, as I mentioned, are staggered. So that's who we are. There are also 12 reserve banks. The United States is divided up into 12 districts, and each of those has a reserve bank in it and the responsibility to, monitor.
Okay, he's just talking about how the Federal Reserve is, what they are, how they are formatted. Powell is just being a grandparent right now to students. 100%. He's just trying to restore the credibility of the Fed. That's all he's talking about right now. I'm waiting for the good questions. We'll see if they come in. Other than that, what do we got here? Remember, 2 months ago we said market moved too high, too fast. If it needed some pullback, needed a pullback to be healthy, 100%. It was oversold. And you know what? Maybe I was a little too bullish on that. I did say if the macro forces pulled up, I could have been a little quicker on it on the breakdown. But hey, let's see how things play out here. I can admit that. And then yeah, Powell's just being a grandpa to the students. saying what he has to say. Should you invest now or you think it'll go back down? Chainlink, always wait for a pullback if you're going to actually get invested. But they do have a conference next week. Crypto, a lot of catalyst. You got Gary Gensler down there. Can't answer a question because if he admits that it's that Bitcoin is a commodity, then he'd be admitting that, hey, they should be passing the ETF. But what I think is going behind the scenes is they don't want to say whether Bitcoin's a commodity or not because they want to keep the legal precedents undecided so they can keep mining Bitcoin. So they can keep purchasing Bitcoin so BlackRock can keep buying Bitcoin lower. If they ever say it is a commodity, boom, sets off a chain reactions. You get that buying. They want to buy low, just like Jamie Dimon. They want to buy low. What is this guy asking? What advice would you give student? Oh my God. Okay, they ain't talking about nothing yet. Maybe we'll just talk markets then if these dudes don't ask any real questions here. Let's see. What do we got? Okay, yeah, let's take a look at the Twitter while they ask these stupid questions. Posted a couple things on here. All right, so here's what I got. Goolsby spoke today about, the stuff we wanted to hear. First off was Goolsby, he's one of the Fed members, obviously. He was very dovish today. Okay, he was pretty dovish in what he had to say. Here's the highlights from Goolsby. Some analysis show inflation reaching the target sooner without further policy tightening and only a modest slowdown in growth. Okay, so hey, that was very dovish. I mean, obviously they're going to go back and forth, but they're comforting the markets. What did we say yesterday? Is the Fed going to comfort the markets? Powell isn't speaking about it right now, but it sounds like Goolsby is they have good cop, bad cop. You guys know how it goes. Good cop, bad cop. That's why the Fed, you just want to hear what they're doing. Forget any single statement. They're trying to play good cop, bad cop. They are balancing out the markets here. They're hawkish one day, then they're pretty dovish on the other day. So Goolsby, housing will be key to continue inflation progress in the next few quarters. Housing, keep an eye on housing. The bad part is there's actually a 3-part series for housing. Okay, housing prices are still climbing on average, right? With housing, the actual housing market rolling over, not good, but apartment builds are going up. So rent inflation for apartments is coming down. So you get that secular shift into non-mortgage living, right? Non-mortgage living. That probably won't play out for a while, but you are getting the construction. You are getting building permits pick up. You are getting construction builds picking up. There is building, there is spending, there is stimulus in the market for the economy through apartments. So we're going to see that growth. It might not be in the housing market, but that's going to also slow down housing going forward, and maybe prices come down and actually serve as a good thing. Goolsby, evidence points to the outbreak of inflation in 2021 as largely supply related. Ignoring supply improvements is a recipe for overshooting. He's making the case here that they could over tighten because they're looking at demand too much consumer spending, when really the inflation issue wasn't so much about demand. The inflation issue was a broken supply chain. Therefore, prices go up, right? If your supply chain is broken and everybody wants your goods or your service, and you only have so many of them, you're going to increase price and say, who wants to buy it? Who's going to pay for this? All of a sudden you get a chain reaction where prices go higher, right? Easy way to think about it. Hopefully I explained that correctly. So it's supply chain. That's not as bad. It's not broken supply chains. We got OPEC, doing what they got to do. So, hey, the supply chains are getting better. Supply chains are improving. New technologies, new builds. We're literally onshoring a semiconductor, the semiconductor infrastructure here in the U.S., here in Arizona, here in other places, and that should ease things going forward. Maybe it doesn't take an effect immediately, but it will. Fed Goolsby, I'm trying to process why. This is funny. He says, I'm trying to process why long end interest rates are increasing. Bro, what are you talking about? Because the bond vigilantes are shorting bonds, because the Fed is selling U.S. debt and selling bonds, because the because the government is literally issuing bonds. Stop acting stupid, Goolsby. You know what's up. This is just, who knows what he's saying. I don't know why literally Bill Ackman is shorting bonds. Literally everybody's shorting the bond market on the long end. And he's going to say, I'm trying to process it. Come on, bro. The RRP is actually taking the short end. He just they don't want to show you that they're doing Fed QE on the short end. Fed Goolsby, if long rates continue increasing, the Fed will have to take account of that as a form of tightening. This is what I've been saying. Okay, we're going to get to your comments there. I'll throw the first one on there. Fed Goolsby, if long rates, I just said that, right? He's saying, well, damn, if 30-year keeps going higher, that is actually a form of tightening. So do we really have to do much more? Do we really have to do much? You're right. Oil's up. That's tightening conditions. 10 years up, 30 years up, tightening conditions. You're already tight on conditions. Do they really need to do much more? And the real question here for markets is, when is it enough for them to say, okay, we need to actually put those rate cuts right back on the table because we're closer to recession than we thought? Or on the flip side, the other argument is these high rates actually allow the government to fund in the money market funds, big businesses to put their cash in the money market funds and actually collect interest and support their own debt, which means basically, oh, we're going to park our money in money market funds, and they're using the Fed here. This is shadow QE. They're going to use the Fed to essentially the reverse repo facility to essentially collect enough interest to fund their own debt. So this is all about efficiencies. I think this is what we're going to see is the most efficient companies continue to climb, and the companies who are struggling, they die. All right, switcheroo on you. M2 money supply. Or would you say, what does the M2 supply do and what does it affect? M2 money supply, you want to look at the global money supply. Basically, it just means liquidity is picking up somewhere. So there's money supply is increasing. The Fed, when they shave the balance sheet, they remove the money supply because what they're doing is they're forcing cash out of the system by making banks buy their assets. Right when they do the reverse, which they did in March, money supply went up. You can see it on the charts. Money supply went up because they actually started purchasing assets back from the banks, injecting cash into the system, injecting more money. Therefore, money supply goes up. Money supply stopped going down, by the way. U.S. money supply stopped going down. China money supply stopped going down. Actually, Chinese money supply is going up. Japan's going up. Brazil's going up. So global money supply is actually starting to pick back up. We'll see if it breaks out over the next couple of months. The closer you get to economies collapsing in recession, money supply goes up, not the opposite. Money supply is set to go higher. Global liquidity is set to go higher. The big factor to that, the big headwind is yields go up. So collateral is literally falling apart and they cannot lend as much as they could. Their collateral is falling, so you can't lend as much, right? That's how central banking works. That is how fractional reserve banking is. For every dollar you put in, they lend out 10. But if that dollar turns into 50 cents, well, now you can only lend out $5. Therefore, liquidity, money supply comes down. That's the big issue in the market. So if yields ease, this is the biggest bullish setup for the markets. What else you got? Like what I answered that. Okay, we got there. I don't have a link position yet, but don't want to FOMO in. Yeah, you don't want to FOMO in Chainlink. But, you know, the low is like $4.90. It could cycle right back down to like $6, $5.50. Who knows? But look at that consolidation. Go look at the charts. When it breaks out, it's going to break out disgustingly. It's going to be disgusting when it breaks out. Biggest consolidation in the market. It is now outrunning Bitcoin and Ethereum. If you put Link against Bitcoin or XRP or Ethereum, it is now breaking out against XRP, against Bitcoin, against Ethereum. Chainlink, hey, let's go. But yeah, don't FOMO in. Do what you got to do there. You want to go in. You want to stick to your rules. Can you please check Apple's chart? Yeah, let's check on Apple's chart. He's still talking about teachers over there. He might not talk about anything important. Maybe the strategy for Powell to have a generic meeting with the students. But this is really info. All the info was with Goolsby's meeting. 100%, 100%, 100%. Yep. All optics there. Goolsby was very dovish, supporting the markets. Tomorrow's the big day. Tomorrow is the big day. So you said Apple charts. Let's take a look at Apple charts. What are you looking at? What is the biggest stock in the market that pulls the market? What is it doing? Oh my goodness, it made a new low. So there goes the, okay, so for Apple, look, Apple's broke down. Okay, Apple broke down. There's a bunch of buyers down here, but there goes the wedge pattern. That is bearish. The wedge pattern broke down, but now you got something, this structure that sort of looks like the overall market, which is a falling wedge. Okay, so falling wedge, you got your target somewhere around this downtrend from earlier. Either way, people are going to scoop up this Apple, right? They're going to scoop it up at some point. Apple buys back their own stock. So like if you sell, they're going to buy it back. They got close to hundreds of billions on the balance sheet. If you sell Apple, they're going to buy it back. They're going to make their stock more scarce. They're going to park their cash at the money market funds. They're going to collect 5% interest. They're going to use that 5% to fund their 2.5% locked in debt. Therefore, their debt is paid for. Therefore, they keep innovating. Therefore, they keep buying back their own stock. Therefore, Apple goes higher, you know, and carries most of the market. Is bigger than small caps on itself. All right. So yeah, that's what we're looking at Apple's chart. Let's see what the RSI looks like. It is Apple's chart looks so wonky. So it looks kind of crazy. I think it's oversold though. You got that? Yeah, it's at the bottom of the trend. Big support here. Let's see. Yeah, it's at the bottom of the trend. It should bounce. I mean, look when you look at Apple, just look at the Qs too. Look at SPY. Apple will bounce here. It should bounce unless it has its own negative catalyst. Obviously, you want the dollar to come back down. You want rates to ease a little bit. But the Mag 7, I think, take over on this next run. If the S&P can bounce here, I think the Mag 7 definitely stick on to this. Also, I wanted to show Carbides. I wanted to show this big reverse head and shoulders for Tesla that he pointed out to me yesterday. Shout out to Carbides. Check this reverse head and shoulders out. You're not going to like this if you're a Tesla bear. Still not talking about nothing important. Okay, so here's your reverse head and shoulders. This is beautiful, actually. Okay, here we go. There's your shoulder. There's your shoulder. There's your shoulder. There's your other. Did I draw that wrong? Oh, no, I see. Look at it. Let me draw this a little better. All right. Here you go. There's your first shoulder. Let's just take this one all the way to the top. There you go. And then the small cup. So reverse head and shoulder, or even a cup and handle, half cup and handle, right? So when you put this together, right? And I think his charts are non-log. It kind of looks like this. I mean, if you're not a technical guy, maybe it looks weird, but that doesn't look right. Why doesn't that look right? Am I drawing this wrong? I think that's it. I think that's it right there, right? Yeah, that's about it right here. But there you go. Shoulder, head, shoulder. And it's kind of wedging too. It's wedging. So you have a reverse head and shoulders, very, very bullish. You have a wedge right here, and you have the cup and handle, if you want to even say that. So once Tesla starts to pick up here, this is a confirmation. If it rolls over, not unconfirmed, but if it breaks over 280, really, yeah, over 280, if it presses to 290, 300, boom, you're out, right? You're probably going to all-time highs from there. Oh, by the way, Morgan Stanley upgraded Tesla to 400 this morning. So, hey, let's go. Morgan Stanley upgraded Tesla to 400. Let's go. What do you say? CNBC trashes Apple with fake stories like China government employees are banned using iPhones. Yeah, that's not true. I mean, CNBC, the media is going to say anything that gets eyes. They probably don't even believe half the stuff they say. They just say it to get the views, right? It's kind of like clickbait, unfortunately, like in the era of social media. You kind of have to give a clickbaity story to get people to watch. There's so many things out there. Because even though if you try to be super actually, if you're extremely just logical, nobody clicks on the thumbnail. You got to give some type of clickbait, right? That's how it works nowadays. But yeah, they're just saying whatever gets them eyes, typically. Let's see if Powell's saying anything.
In terms of teams, I have to say, like many people, I stopped following the local Washington team. But now
Oh my gosh, he's talking about nothing. This was a waste of my time. So actually, no, my bad. We'll keep it on the charts. And I'll see if I'm gonna double check Twitter. Had some stuff coming up there. Oh, liquidity. That's what it was. I want to show China's PBOC liquidity going up. So Zero Hedge reposted something. It said oil is tumbling because Cushing in the SPR got refilled overnight. I don't even understand that. I just posted. I was like, is this real? Is this a real story? Got to look into it. It's going to move high when it does. Yeah, it's going to move. When it does move, it's going to move. They've been bashing Apple for several weeks now. Why do you think they bash Apple? So they can buy more. So you can sell, right? They always say, everybody says the market's against them, but really, I mean, they're going to bash it so they can buy more Apple. They're going to buy more Apple. When it's up, they tell you to buy it because it pumps their bags. When it's down, they tell you to sell it so they can buy more at a lower price. would you say carbides? A complex head and shoulder has multiple shoulders. It's drawn right the way you did it. A head and shoulder lives inside a triangle pattern, so you could see a giant symmetrical triangle also. Yep. Okay, yeah. They all kind of live inside each other. That is something that you do pick up as a technical analyst. If the more multiple setups and patterns you see, the more confirmation in my view. So 100%. Thanks for pointing that out, because again, it could tip your scale a little bit, your entry point. I'm still looking for an entry to add another contract on Tesla, but I want to see what happens tomorrow. I want to see a sharp sell off and a capitulation before that, and then get above VWAP. But it is forming a pretty bullish triangle here, and then you got the reverse head and shoulders. This is where all the pressure's at, right? This is where all the pressure's at, between 250 and like 275. Yeah, they want to buy more Apple. Same thing with crypto right now. Why do you think Gary Gensler's out there refusing to tell us if Bitcoin's a commodity? Because they want to keep mining Bitcoin. They want to keep buying it. There's ways you can buy it where it doesn't show up on the blockchain. Every single, every miner that has to sell, they're just buying up the exact amount they're selling. They're not doing any big buys, just really small, a bunch of small buys, buy, really, 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 really small. That's what Michael Saylor did back in 2020. So I think that's what's kind of going on there. Yeah. So yeah, you have that. What else do we have from Goolsby? If long rates continue increasing, the Fed will have to take account that is we already said that, form of tightening. Oh, the IMF expects China to meet GDP growth target at about 5%. So now the IMF is the International Monetary Fund. They're now expecting China to meet their GDP forecast over the medium term. Who knows whether that's true or not? They throw stuff around, but I think it's because China is increasing liquidity into the market here. They're pumping global liquidity. Yeah, they are pumping global liquidity. The AI, oh yeah, let's look at this. Let's look at this AI, this sentiment indicator. I always say it wrong. The AAII, not Wells Fargo, Bank of America, B of A, AAII survey. So here's the historical view. I believe for this month, historical view is usually, well, this was, wait, hold on. What date was this? Did I do the wrong one? Oh, no. Yeah, this is correct. So this is a historical view. So let's start with the beginning of September. Remember, September is the seasonally most weak. It is the weakest month of the year, and we've seen seasonality all year. This has been a seasonally, literally on target, accurate market. It's been moving with the seasonality, right? So what we saw in early September is the bulls overcoming the bears. There's more bulls. There's more people bullish, right? That started to wane, right? Going deeper into September, it goes from 42% to 27%. And then the bear, there's more bears now. There's even more people neutral. What does that tell you? That the swing, we're near the swing, right? Any type of positivity, technically we're bouncing. We'll see the PC data tomorrow, right? Yields and the macro forces, which I think are really the best indicator. Forget all the news. Just look at the macro forces. They're going to tell you right away what the market is pricing in. Those macro forces come off. This is going to be a big swing back into October for the upside. So you have that. And this is another way of looking at it. Bull bear spread. There's now less bears. It's at -10, probably like 13%. So way more bearish now. Everybody's bearish. And they've been bearish all month. So it's not like it just happened. Dima Yush, government shutdown means no data for a while, right? Bro, yes, it does, but that's not going to happen. That is just scare tactics. Even if the government shut down, they're going to find a way to get that data out. That is crazy. It's just the stuff that they push. There's going to be no data. I really doubt it. They'll find a way to do it. So yeah, they're going to find a way to do it. I don't believe any of that. All right, so back to here. What do we have? The RSI. There we go. That's Tesla. Oh, equal weight. So equal weight caught a bid. I mean, we've seen this. Oh, here we go. Yeah, pushing Apple down will push down the whole market. That is true. In the end, trading is simple, but the entries are hard to gauge. Yeah, entries are hard. There's either an accumulation phase, trending phase, or distribution phase. I think Tesla's in accumulation phase. Yeah, you can either buy really strong dips to the downside. If you're oversold, probably if you're extremely oversold, your best bet, I think, is to buy a very extreme downside move when it's just painful, right? So on the bigger time frame, it's oversold, extreme exhaustion. On the middle time frame, oversold. On the short-term time frame, oversold. That's where you want to just buy the downside. Extreme downside, let it get so nasty, it's like, no way. Boom, you buy it, right? But if you're trying to trade a breakout, I don't do that. On a breakout, I'd rather see it get back above VWAP. As it breaks out, get back above VWAP and then hold. Well, it depends how you're trading. It depends how you're looking at that level. So yeah, I agree with that. Let's see where was there an entry today? Tesla right now is trading the most volume in the entire market as usual. So where are people positioned at, right? What does this positioning look like? Look at that. That's a nice little consolidation. That was a nice accumulation we got there. So we got that break. We got the hold of that break couple days. Now we're forming another consolidation phase. So this is pretty clear. You break out of this, I mean, and that's going to happen in pre-market. So we'll see how it works in pre-market. But look at that dragon wedge. If there wasn't a wedge or a flag, I guess you call it a flag. If there wasn't a flag when I saw one, right? You're coming from the lows. You start to flag. You start to break out over, I think I guess 250 is kind of far up there. But yeah, it's looking pretty solid. What was the price action like in the... Let's see what that 1 minute price action looked like. I was looking at this morning. For Tesla, it would have been... hold on, let me turn on the pre-market. There we go. Oh yeah, here we go. So this was the pre-market action and then it started to move up. So the entry that I would have looked at is, okay, where's the pre-market highs? Okay, we got above that, but it kind of sold off. And you started to stair step back up, right? And then once you get above the previous high, this is kind of your breakout zone right here. And this is also what, 243? This is that zone that it's been on, that had been on. So that could have been it. Or, you know, it really depends how you do it. Or it could have been this. I think this is VWAP. I don't have VWAP on here, but I think this was, pretty sure this was also VWAP. Yeah, forget, I mean, you can forget the green lines. Let me take those off. You don't want to see the green lines. You don't want to see the green lines, but the blue line, let's just say I always make it purple, but let's keep it blue. Yeah, so once you got back above VWAP and look at, you get 1, 2, 3 touches on VWAP and then the break above the consolidation, there's your entry right there. Or you enter at VWAP for the third confirmation. You get 3 confirmations at VWAP, right? 1, 2, 3. That's how I would enter Tesla on a swing or even a day trade. You know, and now it's consolidating, so we'll see how that plays out going forward. People are, oh my bad. People are saying we're heading to recession because something, because of the U.S. debt, it went to 33. Oh, it's the stupidest thing I ever heard. This is all politics. I just watched the debate yesterday. It was trash. The hosting was trash. I mean, it was just trash. The debt at 33 trillion means nothing. The stock market's been going up. We haven't had a recession for a last time and the debts only went up. So that's not the recession. The recession is, if you're talking about a full-on breakdown recession, it's not necessarily the debt. It is consumers losing their jobs because then you can't service the debt. So if unemployment spikes and breaks down, that's where you get the recession. Nobody can pay their, it's a domino effect. But you need job losses. You need massive job losses. And that's probably the only way you really get a recession. Not necessarily, because what does the Federal Reserve do? And also the U.S. Treasury, they literally, if they can't pay their debts, they print more money. Well, the Fed doesn't have debt. They print money to pay off the old debt. They make new debt to pay off the old debt, and you kick it down the road. So it comes down to, can you pay as a citizen, as a consumer? Can you pay your debts? Well, if you have jobs, you're going to be fine. You just don't want job losses. Ticker media. Oh, something about credit card debt. Yeah, credit card debt goes up and down. It's not, again, you need job losses to really impact. You really need massive job losses or a black swan event. You need a black swan event. Thoughts on Dollar General or Target? I think they're trash. Any thoughts on Netflix? So Netflix, Dollar General. Let's see. Netflix, NFLX. Netflix, man, Netflix looks like it's poised to bounce at some point. It's Netflix is one of those consumer. Dude, I'll tell you this. Netflix has some. I don't know about you guys. Maybe it's just me. I don't know what most people watch, but Netflix has had some crappy shows, nothing really good, and the price shows. The price shows when they come out with a good show, all of a sudden the price goes up. So, but it looks solid. It's coming into support. I mean, you got what 370 pretty much above 370 is pretty bullish because it's already over. Is it oversold? Yeah, it's oversold. I think Netflix bounces. It goes higher. It's still a consumer staple. These big tech companies are turning into consumer staples because people use them every day, right? They're more likely to drop buying beef than Netflix. It's insane because it's like $14 a month, right? People are still gonna pay that. So beef, shoot, it's $14 for 2 meals. So I think yeah, I think Netflix will be fine there. Dollar General, I would not mess with it. I think it could bounce, but bad business. I mean, you guys see all the lost inventory. I don't know. I don't like Target or Dollar General. I think they still have a lot of political headwinds in front of them. They are oversold, but these things, like I said, it comes down to efficiency. This is going to be a market of efficiencies. Now, if you want to short Target, perfect. Let it pull back into previous support. 115, 120, who knows, and roll over. So you could short Target. Most people don't short, but no, Amazon's taking over. This is like the next wave of Amazon. I don't think so. And then some say, "Oh, my bad, I didn't read it." Some say we're already in recession. We are in recession for a lot of industries. It's called a rolling recession, where some parts are recessionary. Manufacturing's been in a recession. Tech was in a recession in 2022. Tech sold off. Like, look at tech. Meta sold off like 80%, right? We had that big recession. So it's been rolling around in different areas. Housing has been in a recession for a while. Housing is still in a recession. They're really starting to feel it in housing. Financials were in a recession, banking crisis. So yeah, now retail's starting to feel the recession. Some parts, industrials are not because they're getting that fiscal stimulus. So it's a rolling recession. It could get worse or whatever. But the main target here is, do we get GDP go negative, and then also unemployment, which is a lagging indicator. You want to look at initial claims, jobless claims. If those start spiking, then you get closer to a wide range recession. Would you say that's why Trump said he's not going to participate in any of these debates? Yeah, because I mean, he doesn't need to, right? It's like Trump doesn't need to debate these guys because they don't really measure up at all. It's a waste of his time, honestly. He already has a platform. He knows what he's gonna do. You guys know what he's gonna do. He's not really. They're not competing with them. So even Gavin Newsom came out and said that. He's like, this is a joke. It's Trump who you're going against. They're just going for VP, possibly. People still spend tons of money. Powell is right. People are not broke because they don't have money. They're broke because of inflation. Okay. People still have tons of money. Yeah, a lot of people have tons of money. I mean, yeah, I think it's pretty even. People still have money. They have the gig economy. They're just not reporting their taxes, whatever it is. So I think we still have room to keep consumer spending. Maybe January is the target. I think once you get the January, February data, you're going to start seeing us get closer to a really fast deceleration January, February after a lot of the seasonal spending. People hate inflation. Yeah, people do hate inflation. Will BTC go much lower before the halving? I don't think so. I mean, it could go to 22K, 20K possibly if you get some event, but I think BTC goes a lot higher before the halving. I think it breaks out and then pulls back. Maybe it goes to like 37, 40K. It really depends on the catalyst. I think they're trying to prolong the ETF. They already said, look, they just pushed back the ETF from November. I think it's like November 11th. They're supposed to be the ETF. And they actually said, no, we're not going to do the ETF. we're going to push it out further. What the hell? It's not even November yet. So I think they're trying to push it to the max. And from what my understanding is, March 2024, they can push the ETF out before that. So maybe it goes sideways. If you get Ethereum ETF, I don't know. If you get Ethereum ETF, then all crypto probably goes higher anyway. But let's see, what else do we see? Penny stocks on your watch list? Nah, I don't watch penny stocks. Sorry, I don't do that game. That's a dangerous game. Dollar General and Target, we talked about that. Trash. Unless you want to short it. I hear more talk about stagflation from different sources here in Norway. Oh, well, if you're in Norway, yeah, probably. I mean, yeah, because energy prices are up a lot and growth is crappy. The other industries are, the other nations are struggling. The US is probably in the best shape right now. So stagflation, sure, but coming from headline oil. Other than that, yeah, GDP, growth is slowing for sure. Growth is definitely slowing. We got to watch the services sector. How much money do people have? I think things do slow, but the economy is not the stock market. I think what might happen, what might be the setup here is you might get a setup where the market has one more big upside move because consumers keep spending and because you get fiscal stimulus in 2024. Oil starts to slow down. I know it's going up quick, but the quicker it goes up, the faster it's going to retrace back to the downside. In my view, not like way down, but it's going to pull back. So you get the dollar come back, you get yields finally ease for some reason. Maybe not, maybe yields keep going up. And I think the market makes another big run from earnings season. I think we're heading into earnings season in October. October is usually the fourth quarter, the market always does really well. So I think we get one more big run into January, and then possibly January is pretty strong. Who knows? And then we get a big pullback. So maybe we run to all-time highs. I still got all-time highs on my list for this year for the S&P. I still got all-time highs. So maybe we go to all-time highs, and that window is getting smaller, by the way. It is getting smaller because of what we've seen. But because yields are up, I didn't expect yields in freaking oil to explode this high for this long. But if it does, if it slows down a little bit, I think the market can just keep looking through it and move back up. Maybe it doesn't. Maybe it chucks sideways in the Magnificent Seven, or the more efficient companies run to all-time highs, breakout. I think Walmart's at all-time highs. Yeah. And maybe you see that, and then the market does rip lower when the consumers really fall off a cliff. Unemployment, does it spike? Maybe it goes to 4.1, 4.2. I don't know. But consumer spending has been a big part of the economy. It's like 70%. So maybe somewhere in January you get a small recession for a quarter or two, and then we go back to all-time highs. Given no black swan events, obviously. When's the day trading coming back? I don't know. I got to think about that one. Making a lot of content, it's hard to do day trading and make content at the same time. A lot of things going on. I have some I have some disc issues in my back. So sitting down, looking at a screen, there's a lot of stuff. I don't know. We'll see. We'll see when the day trading comes back. I'll let you guys know when that does come back. BTC went from 19 to 70K in the last bull market. Actually, no. BTC, yeah, you're right. But it actually went from 3,900 to 69K. Yeah, pretty much 4,000 to 70K, whatever. In the last bull market from the lows, if you measure from the lows. And then let's see, what do we miss on here? Stagflation in Norway. Yeah, we talked about that. Oil prices up, growth is slumping. But you guys are going to start getting in Norway, a lot of these areas, when oil cools, you're going to get more stimulus coming in. Appreciate the love on the lives. You're going to get more stimulus come in. And then also, would you say, what's good, Brody? What up, Jason? 956313. Boy, got his number on there. What's going on? Do I know you? I'm not sure if I know you. But yeah, what's going on here? We're just, really for me, I think the biggest catalyst, yeah, the market is kind of shaky right now, is this crypto catalyst. The crypto catalysts are picking up. It takes time, but once they filter through, there's going to be a big blow off top here, especially for Chainlink. What's your thoughts on the next bull market? 250K? Oh, for Bitcoin, it depends. I like that question. It really depends on the macroeconomics. So if we get the dollar move sideways, I think Bitcoin goes to 150K pretty easily. It doubles from here. I mean, doubles from the highs. That's not out of the question. It usually does something like that. You're getting the biggest inflow of currency of cash in history for BTC, right? You're getting the big BlackRock opens up the retirement system, hedge funds, pension funds, all these big money players who don't want to get private keys. They're going to be open up to buying Bitcoin. They know the wallet addresses are growing super quick. They're growing fast. It is a secular adoption. Crypto is Bitcoin, even though a bunch of them are trash. They're going to buy Bitcoin. So I think we go to 150K. If you get the macro forces in play where bond yields actually start to decline, the Fed cuts rates because inflation's back down, the dollar rolls over, then I think Bitcoin can run to 250K pretty easily, right? And I'm going to be watching the ISM. The last two cycles, Bitcoin peaked when the ISM peaked. It peaked, what is the ISM? I wrote this down. Let me see. No, I have it over here. It usually peaks when business activity in the manufacturing sector peaks. That has been the typical. See if I can find it here and show you what I mean. GDP, no, here it is. ISM manufacturing index. And I'll throw Bitcoin on there so you can see what I mean. So this is what I'll be watching. Let's put this at 50. Yeah, 50 is contraction. You see we're still in contraction. We're still in the red here. And then I'm going to overlay it with Bitcoin. Or you could even put crypto on there. And let's turn this into candlesticks. Let's turn this into candlesticks. And a log chart. Okay. So is that 50? Yeah, let me get this at 50. There we go. So yeah, Bitcoin, and we talked about this before. Let's see if I could, dang it, I keep grabbing the wrong thing. There we go. So yeah, the last two cycles, you can see right here, 2013, Bitcoin peaked, the ISM peaked, right? Pretty simple. Next cycle, Bitcoin peaks, the ISM peaks. Pretty clear. Next cycle. Now this doesn't mean it's going to happen, right? Correlation is not causation, but keep your eye on it. This cycle, this last cycle, the ISM peaks, Bitcoin peaks. Look how simple that is, right? I was going to sell this for $10. No, I'm just kidding. So yeah, it's pretty simple. Bitcoin's peaks, the ISM peaks, the ISM bottom, somewhere around the bottom of the ISM is the bottom of Bitcoin. We're already seeing that. But yeah, that's how I'm going to look at the next cycle to see, does that also add up with RSI oversold? Do I see bearish divergence on Bitcoin plus the ISM? So I want to add up the technicals. I want to add up the macro, and I want to add up the fundamentals of Bitcoin to see where that next peak could or might be. This last peak happened because inflation picked up and the Fed started tightening. Simple as that. And the ISM shows that. What will the money managers say if their Bitcoin ETF buyer to their Bitcoin BTC ETF buyers when BTC crashes after the next bull run? Well, I mean, here's the thing, if they get in now, if they get in early, Bitcoin retraces 80%, they're going to be flat, right? Also, if you're getting the Roths, the 401ks, the pension funds, they're not selling, you're not going to get an 80% correction, which we all thought that would be the case in this run, but it just wasn't the case because that big money never came in, right? We never got the Bitcoin ETF. So that's the question. The ETF was going to slow down the price action because you're not going to have massive sellers. It's not going to retrace 80% because the big pension funds are not selling. Also, the big Bitcoin hodlers, they never sell. They never sell either. Yep. So that's what you're looking at there for Bitcoin. I'm watching the ISM business cycle. Oh, I should have put it on 1 month. That looks way better. Either way, it's the same thing. What, Fed to add 15 billion of mortgage purchases on top of 32 billion planned? What is this?
When the Fed bought mortgage-backed securities in the financial crisis, it was very different from when they.
Ooh, mortgage-backed securities. Are they going to start adding? So might be less of a retracement for BTC. Yeah. Once the ETF opens up, you're not going to have as big of a retracement because you're not pension funds and 401ks and retirement. Well, hedge funds will trade it. But 401ks, they're not trading. Retirement funds, they don't trade. They invest. They just hold it there. Put this back on the candlesticks. Let's see, what else are we missing here? So yeah, that's my thoughts on that. You know, that PC data is gonna be very important tomorrow. So let's what else do you have any questions? Hey, appreciate the lives or the likes on the lives. Man, you guys have some crazy names. I can't even pronounce them. TL Abe 2022. I appreciate it, man. Or woman, whoever you are. Can't tell because you guys got these crazy names. Like Shinobi 24 or user 66559024. Can't tell. Yeah, so the economic data, okay, again, something to watch out if you're a trader tomorrow, or just to know, just to teach yourself, just to be a little more. Oh, okay, there you go. Now I can see you're black. All right. What up, my guy? Now I know. Hopefully that's really you. Yeah, I appreciate it though, bro. All right, so we know the people are very bearish. This is a good setup for the bulls. Economic data that we'll be seeing tomorrow. Friday's a big day. Obviously, it's going to be early. Mine says 5:30 a.m., but that's because I'm in Arizona. This is 9:30, market open pretty much, or not market open. This is 8:30, so an hour before the market opens. You're going to get core PCE, right? This is going to be big for the market. Expected to come in at 0.2%. All right, we're looking at 0.2 here. Month over month. I mean, it has to come in at 0.2. If it comes in lower, this is actually a good sign. This would be really good. So this is the PCE is the one macroeconomic factor that if it comes in lower, it's not going to scare the market. It's going to be really good. So you're looking at core PCE month over month, and then let's skip this first. This is the consumer report. PCE month over month. You want to see that expectations are at 0.5, so that's expected to go up. Because of oil inputs to transportation, there's two factors moving up this core PCE measure. Not core, this is non-core. This is just headline. It's supposed to come in at 0.5, which would be way up here. There'd be a big upside move. Why? Because oil prices do factor into transportation costs, and they do factor into, well, no, actually, it's mostly transportation costs. There's some other costs. Also, portfolio management services have been hot also, which is stupid. They're charging you more to invest your money. What a scam. What a scam. So anyways, PCE price index year over year. This is going to be a big one. It's expected to come in at 3.5. So it's expected to tick up 3.5. That's not a big deal. It's oil. All right, again, it's going to be those transportation costs moving this up. So as soon as oil comes back down, I mean, it's expected, right? We just don't want that to come in hotter than expected. That's PCE year over year. If we look at, let me see, what is the important one that I want to see? The most important, I want to see core. Where's my core? There, no, that's not my core. Where's my core year over year? Year over year core, where is it? Oh, you know what? I changed these. This is dumb too. I don't even know why they have it like this. They tell me what's the most important indicator. That changes every month, every business cycle. There's something that's less and more important. They're trying to hide it from you. Here it is. Core PCE year over year. This is what I'm most focused on specifically because it's a better indicator for the long-term trend, and it is core. So expected to come in at 3.9. That's a pretty good expectation. Breaking into the threes for the first time. This is what gets the market up tomorrow, I think. I think this coming in on target is going to get the market hot because we know oil's up and the market's not really too concerned about oil's yields. This can ease yields if it comes in lower than expected. That eases yields. That gets the market very bullish here. Core PCE year over year. Month over month is volatile. It does give you insight, but it is volatile. So that is what I'm looking at. Core PCE year over year, month over month. Yeah, that's a good indication too. But more so, we could just look at personal spending, right? Personal spending needs to come in line. This is where it gets sensitive. It's expected to come in at 0.4%. Anything above that, not good. Anything below that, maybe not good. Maybe not good, because it's like, oh, the consumer's falling off a cliff, too high. They're spending too much. The Fed has to do something. So you're looking at that to come in at 0.4 versus last month was 0.8, or the last month, which was July. July was, I think these come down though. July was the hot reading from durable good orders. We got durable goods yesterday. That showed a deceleration, a big deceleration in goods from January. Personal incomes, right? This is going to be also important. Personal incomes, is that a big deal? Probably if these slip really far, if these really slip, then that's going to be more recessionary. Who knows how the market, how the market prices that in. I want to be watching the Fed rate, the Fed futures to see if they start pricing in hikes. They increase the probability of hikes. And then you have Michigan consumer sentiment. That doesn't come until 7. That's going to be a little later. So Michigan consumers, how are consumers thinking about the economy, inflation expectations? This is interesting though. The 5-year expectation is expected to go lower, maybe because that is all about core. And then the let's see, the 5 years. Where's the 1 year? The 1 year is expected to go lower too. So this is really good data. I think this is good data if it comes in line. We really want to see things come right in line, not too crazy upside or downside. Oh, we already read that. Okay, yeah, we got that. What does 2.1% GDP moving forward for the market mean? What it means is that the tomorrow and Monday, let me make sure I get these. I always say jump to the YouTube so they can get saved. So what's your thoughts for market tomorrow and Monday? Let's see. Tomorrow, we kind of just went over that. The market wants to see the economic data come in line with expectations. But we are oversold, so I'd say there's more of a bias that the market does bounce. Powell isn't really saying nothing today. So you need things to come in line. You don't want spending too high, and you definitely want PCE to come in line. So I expect the market to actually respond positive tomorrow, whether it sells off first or after. I don't know. I don't want to tell you. This is a crazy market. I really don't know. It could respond negative initially and then guide higher at the end of the day. So really, we got to finish the day to see how it responds. But right now we are oversold, so I'm a little more leaning towards we get a bounce, right? Which means any slight bit of good news, meaning spending is right in line, or PCE is lower than expected, yields come off, bond yields come off. That's really causing havoc, and the market runs, because that also impacts the dollar come off. The dollar comes off a little bit. And so, yeah, that's what I'm expecting going in tomorrow. Now, your next comment question was, what was your next question? See, they always get lost here. What does 2.1% GDP mean? That just means that the growth rate of GDP, which is gross domestic product, the growth rate is at 2.1%, which is around trend. So how could I explain this? Well, the reaction was, the expectation was for 2.1% GDP. We got that perfectly. That's what the market wants to see. The market doesn't like surprises. That's what the market doesn't like. It can price stuff in ahead of time, and it doesn't like surprises. So GDP, if it came in hotter than expected, the Fed said, if we get hotter than expected growth, that's going to cause us to increase rates. And that would give you more reason, or more variables, or that would lean you towards a November rate hike. Okay. If it came in slower than expected, maybe, yeah, the rate hike's not on the table, but now the market has to battle with lower GDP, lower earnings. Therefore, more the consumer stocks, they get smashed, right? Maybe even S&P. I don't know what it's too worried about. We'll see tomorrow what it's more worried about going forward there. So that's what that means. 2.1% is pretty good. We're expected to keep decelerating. If we really hit a recession, we're going to go negative GDP. I don't really see it. I know a lot of people see it. I don't see it without a very big event. I don't see it without a very big event. Inflation going to 9% was a very, very big event, right? That was a big tax. Here's what people are missing. 5% interest rates actually it punishes borrowers who are it punishes borrowers who are variable borrowers. So it punishes companies and consumers who are borrowing off of the moving rates. But if you're borrowing off of locked in rates from years ago and you don't have to refi for it till 2027, 2030, well, who cares? Because the rates don't bother you, right? The rates don't affect you. Number two, you can, as a big company, individuals don't do this, you can park your cash in the money market funds and receive 5% and then go pay off your 2.5% service payment, and you still have 2.5% liquidity left. Therefore, these high interest rates benefit people who are fiscally responsible, who've been monetarily responsible, who have really good businesses, who don't have a whole lot of debt, who are still growing their revenues, and revenue is going to be important in this next bull market. First, it was margins. Can you guys be efficient? We got the margins. We had that big blow off top on S&P. Now it is, okay, we got your margins, but can you get revenue? Everybody's expecting growth to slow down. The rate hikes are taking effect. Can you retain revenue? Can you make revenue? So that's the next question, which we'll start to see in this next half. Yeah, you're welcome, bro. No problem. Appreciate you guys also on there. And if I make fun of your name, don't take it personal. I'm just messing around. So let's see. Yeah, so I think that's what we're looking at. Any big questions, anything serious? I'm trying to think if I missed anything. Looks like that was a stupid Fed meeting. There wasn't really nothing to see there. It's just Powell. That's probably why the market responded to Fed Goolsby for the most part. What are the legitimate sources to know economic data? What are the legitimate sources to know economic data? Well, you have there's where you're getting your economic data, and then there's people who you trust that they're interpreting it. Here's the thing: economists get the interpretation of economic data wrong all the time. So it's really a very competitive game. Who do you trust? Who can you trust? What's actually coming out here, right? There's always disagreements, so nobody's going to really give you the right answer. Nobody knows exactly, but you have to think logically. You have to use rationality. Hold on. Make sure I'm not on the wrong thing. You got to be a rational thinker here. So you have to think for yourself, right? When it comes to this economic data, look at history. Don't have recency bias. So don't look at the past and say, oh, well, because it happened in the past, this should happen now. You can go to tradingeconomics.com, tradingeconomics.com. Just go to the calendar and it's going to give you all the economic data that you need. But interpreting it is another thing. I have some posts on the website called the business cycle. Go to the business cycle. It's literally one of my biggest posts on my website, on the website mindgrowth.io, and go to the business cycle, and it has all the important economic data on there. And if you click on it, it'll actually take you to the real data point. It'll take you to that website. So go check that out. I probably need to update it. What stocks have you been betting on? Tesla, Zoom, even though I got out of Zoom because I don't like these macro forces being negative. I'm going to push my risk towards Tesla. So really, I'm really big on Tesla. If you're just talking about in general, Tesla, Bitcoin, Ethereum, Chainlink, right now the stocks, but Bitcoin is not moving until that ETF comes online. Ethereum, probably the same thing. Chainlink has been up insanely because of what they're doing. Tesla up, Meta's up. I mean, there's a lot of them, but I don't focus on everything. You know, you're a master of everything, you're a master of none. So I like Tesla. Cybertruck is coming online, right? The expectation is now in that Tesla deliveries are lower than expected. So that sets you up for a good beat on expectations. If it does happen, it priced in the downside probably. You have FSD licensing on the table. I think you have some more surprises in the back half of the year. Morgan Stanley just increased their price target on Tesla to 400. I think there's more upgrades to come for Tesla. There's a whole big narrative behind Tesla, gigafactories being built, going into India. The energy storage business eventually will be bigger. That is literally cutting the cost of energy. There's so many catalysts. I think Tesla is the most catalyst. It's a very hard stock to trade. But long term, I'm the most bullish on Tesla as a stock. Also, Palantir, they're starting to move again. Palantir's starting to move again. They're getting contract after contract after contract. To me, it's the best pure AI play in the market. I don't talk about it a lot. I was talking about it a lot before. It is starting to push the trend here at 15. But Palantir, best pure AI play in the market, as far as I understand. Okay, that's what I think about Palantir. That's why I'm thinking about it. So that's where I'm at. Tesla, Palantir, Bitcoin, Ethereum, Chainlink. You know, I mean, there's other plays out there, but to invest in, that's what I would say. You got some Tesla. I'm big on CCL. Oh, why? Tell me why. Tell me why. Carnival Cruise Corporation. Hey, cool. I hope I don't hurt your feelings. I really hope I don't hurt your feelings. But until let me see, it is, you know, it's coming back into support somewhere around $11-12. Carnival Cruise. I just don't think these stocks really have it in them. These stocks need rates to come down. These stocks cannot do well in a high rate environment because it's a lot of discretionary spending, right? So you need cash in people's hands. You don't need to be going into recession. In a recession, Apple, Amazon, Google, Facebook, the Magnificent Seven can still move higher versus Carnival Cruise cannot. That's what I'm going to say about that fundamentally in the macro. I don't like Carnival Cruise right now. It could go up higher in the future for sure when the Fed starts to cut rates, when the business cycle actually picks up, when the ISM gets above 50, services are floating, you know, employment comes back, the Fed injects liquidity, Carnival Cruise probably takes off, but I don't like it in this environment. Oracle's going to be straight. Oracle's a huge AI play, you know, AI/cloud computing play. So Oracle's good for the long term. I mean, they have a pretty good business model and it's down a lot, which is really good if you want to buy it. It's at the previous highs. I like Oracle, not as a trade, but it's straight. What is METV? You mean Meta? If you mean METV, I don't know what this is. Roundhill Ball Metaverse ETF? What the heck? I don't know what this is. This looks dangerous. What up, Yassine? How's it going, Yassine? This looks dangerous. I like the setup on it, MEDV, but I don't know what it is. I don't really have a comment on it. I can't really comment on something I don't understand fully. But when I see Metaverse, I kind of cringe a little bit. What do you mean Metaverse, right? The people just attach Metaverse to everything. So I don't know what it is, though. I don't know. It is pretty sharp pattern, though. Looks like it has some upside. Would you say, trust me, you have a lot? Wait, who are you talking about? Trust me. I never even said anything. I wish man, if my back didn't hurt, I would do commentary all day. But I used to be a football player. I used to squat. I used to overlift heavy. I played for New Mexico State University running back, and I was obsessed with lifting. I still am, but I lifted too heavy, messed up my discs, so I got to be careful. And therefore, if I sit all day or stand all day, it's not good for your knees, not good for your back. Blase, whatever. If I could walk and do commentary, I would. That'd be cool. Oh, oh man. Okay, let's go through these. Yeah, this is funny. Did you see GDP, bro? It went less than forecasted. You did explain to me better numbers would be bad, but not less. Well, Yassine, GDP came in as expected. I don't know where you got that from. GDP came in as expected. Better numbers would be bad, but not less. Yeah, actually, what I said was, maybe you misunderstood me. I said yesterday, if GDP comes right in line, it would be perfect because there's no surprises for the market. If it comes in lower, I think lower is not as bad as higher. Lower would mean the Fed doesn't necessarily hike rates, but it also means maybe things are going to break for sure. Higher would mean the Fed might have to hike rates. So higher, lower, you know, not good, higher being worse. Came in right in line. So that was good. The market liked that. With other data, yields came off, the dollar came off, oil came off. Oil had nothing to do with the number, by the way. Oil is of a trade right now, but the yield in the dollar did have to do with that, in my view. What happened to BitBoy? He's losing his mind. His ego got too big. He had made a lot of money in a crypto guy. He started chasing after everything. But listen, I don't want to hurt nobody's feelings, but BitBoy, I always have this thing. You can't trust fat people. I'm just gonna say it. You can't trust overweight people. I'm sorry if it hurts your. Actually, I'm not sorry, because especially for a man, because you can't trust somebody who they can't trust themselves. You got to say no, right? You got to say no. So, and I have a lot of friends I work with their diets and all that. And I'm not saying that's what BitBoy's problem was, but if you're already overweight, you're drinking energy drinks like crazy, you have a bunch of money, you're probably eating more crap, and his ego is overinflated. He's cheating on his wife. Like, he did so many crazy things that he just lost his mind. But that's my saying. It doesn't mean you can at all. It just means, like, when it comes to BitBoy, guys like that get super excited, they're drinking energy drinks, all that, they don't work out, they don't lift. It's a reflection of lack of discipline. Okay, very lack of discipline. And I know, you could make the other argument, well, guess what? People take steroids. Yeah, that's not what I'm talking about. He's unfit. He's unfit, and that pours into your mental health, and that pours into a lot of things. He doesn't take care of himself, right? And he's drinking a bunch of crap. He doesn't have a disciplined diet, XYZ. It doesn't mean, other people are better than him, but can you trust that guy? Anyways, yeah, that's my take on BitBoy. He messed up, and he's out of his mind right now. Hopefully he comes back. I mean, I hope the dude gets in shape and gets his mind right. Christ is king. But other than that, BitBoy, he lost it, bro. He lost it. And he tried to apologize playing victim too. He tried to apologize playing victim, talking about, oh guys, I'm so sorry, guys. Like, he tried to play victim instead of owning up to it and kiss ASS. I don't know if I can say that, but yeah, I don't respect BitBoy at all. I don't hate him. I just think, like, he's a sorry person to look up to. He can make money though. He's a good marketer. He's a master marketer. I'll tell you that. DXY went down after the news. Yes, DXY went down because, I don't know exactly why, but I'd say DXY went down because rates came down, because the risk of growth being too hot was not there. So rates came down. Rates respond to hot growth. If growth is too hot, rates come off, right? The bond market comes off, because people invest in bonds specifically because the economy is slowing, and therefore they want to protect themselves against a collapse in growth or low growth environment. So when you buy bonds, when you sell, or when you buy bonds, GDP coming in low, people bought more bonds, or at least the short sellers covered, the people shorting bonds covered, rates came down, dollars affected, that dollar came down. It's a whole chain effect. It happens probably like 75% of the time. Sometimes you get these moves that don't make any sense. They just happen. So you never know exactly. Anyways, yeah, what else we got? Go ahead, hit me with the questions. Let me see. I don't know if I'll be live on Instagram tomorrow. I don't know if it's on my channel, but I'm doing it for some Swedish guys. Shout out to Sweden. We'll be talking about macro tomorrow, but when we get those numbers in, and then I'll be back on in the evening to give you guys an update on the damn PCE, the consumer. That's going to be big tomorrow. PCE, right? What does a consumer look like? I think, yes, the economy is going to have some struggles here, but I think it can drag longer, given nothing breaks. I think it can drag stronger for longer. Why? Because we're going into October. Everybody wants to go to Halloween. Everybody wants to buy costumes to look good, to get that attention, blah, blah, blah. Here goes all the costume spend parties, blah, blah. And then you go into November. What do you get? Oh, Thanksgiving. We got to travel. We got to buy this. We got to buy turkeys. We got to look good for our cousins, for our aunties. And we got to make sure we have all the right gear. Oh, it's Christmas. We got to buy all these gifts. So the consumer, I think, is going to overdo it this season. And I think the market's going to go higher by end of year for sure. And, fiscal policy coming in Q1. And then really January through March is going to be a question. I think January through March, it's like, are the consumers going to drop off here? So we'll see how this plays out. Do I like Disney? I do not like Disney. My friend likes Disney. He's invested in Disney. I think it's trash. Not just politically, but I think Disney could be good. I think they could be good, but I think they're too woke. I think they need to get out of that wokeism, and they need to tokenize their assets and create some. They need to use crypto or tokenization to figure out a way to monetize their business. And I think Disney is trash. That's where marriages fail. Go to Disney. That's how you know your marriages fail. So yeah, Disney in Vegas. Prayer kid. Oh, what up, prayer? Oh, we spoke. I mentioned looking for a 5 to 10% drop in the market. Oh, pray. Oh, I said pray on that 5%. Is that what happened, bro? I could have sworn when I said 5% drop, it was from the highs. I think you said 5 to 10% drop from where we were. We dropped 2% from where we were. So hey, don't try to trick us here. From the highs, we did drop about 8%. I never said we wouldn't have a drop from the highs, right? This was from the lows. I said we're oversold. We're not going to drop 5%. I said good luck. We're still on the trend. So we dropped what, 2%? So good try there, prayer kid. Good try. I don't think so. 5 to 10. We didn't even drop 10% unless you're looking at a stock, a certain stock. So nah, bro. But we did drop. Yeah. If you're looking for a drop, we did drop. You got that right. Thoughts on Coinbase? Coinbase needs a Bitcoin ETF. Thoughts on Amazon? I think Amazon has a really good setup. AMZN. Amazon has a good setup. Look, Amazon's one of the strongest AI names in the game. Amazon is very looking so far out into the future. So Amazon has a really good setup. I think fundamentally, technically, and it's at support right now. It got a huge sell off, but I like Amazon. Amazon's one of those names that has been in the trenches for so long. It's about time that they shine. Especially in the season. People are going to be buying a lot on Amazon. I still buy stuff on Amazon. I'm like, I don't want to go to the store. I don't want to drive. I'm going to just Amazon it. And then plus they're doing some AI stuff. Like Amazon's a golden. I like Amazon for sure. Coinbase needs the ETF, period. They need the ETF. They need regulation. How could all these things, Halloween, etc., already have impacted PCE? It's not Halloween or anything. Yassine, you got to put your stuff in the chat GBT, bro, and then send it out. It's hard to read it. I'm going to read it again. Maybe I'm wrong. Could all these things, Halloween, etc., already have impacted on PCE, personal consumption? It's not Halloween or anything. I don't think so. Not yet. I don't think Halloween is priced in yet. If that's what you're asking there. Zoom Teladoc. Freaking Zoom, dude. Zoom, I was really hoping. Zoom, it dropped that 68 level. I didn't like it. ZM, I really didn't like it. I'm sure it did bounce though, right? It just bounced on the trend. So let's see. It did bounce on the trend here. And look, Zoom is still okay. Zoom is still great. I don't like what I'm seeing here here's my thing. I like Zoom, but when given the choice, I'd rather take risk in Tesla when the macro forces are against me. Right now, the dollar's still holding against 107, 106. Bond yields are still breaking out. Oil is still moving up. They did ease a little bit today, but I don't want to wake up to Zoom gap down like crazy. I don't think that happens for Tesla. Tesla has too much upside to it from a fiscal policy stance, from an innovation stance. I still like Zoom. Right? I'll get back into Zoom if I need to. Teladoc just trash. I'm not even looking at Teladoc right now. I'm pissed. Teladoc is trash. I know it's going lower, but look, Teladoc is one of those names. It could go all the way back down to $10, unfortunately. So I just don't like Teladoc right now. It dropped that level. It couldn't get above it. They have a lot of issues. You know, I thought they could pull it together. It is probably oversold and it's going to bounce, but I'm not even going to look at Teladoc right now. What about the macro worries for you? Well, I kind of just said it, right? Oil keeps going up faster. The dollar keeps going up faster. Yields keep going up faster. Easy as that. Student repayment, not worried about. I'm not worried about student loan repayments. Debt ceiling, hell no. I'm not worried about the government shutdown. That is stupid. Maybe you get a couple days of downside, not worried about it. The AEW strikes, right? The strikes, though, I am worried about. That could cause some supply side inflation and unemployment to spike also. But I don't think it's there yet. It's getting there. So I'm more worried about the automotive strikes more than anything. Positioning is very negative, so a lot of people there's a lot of fund managers that are going to buy into this market. I think they're already doing it. We're seeing the bounce. So those are my headwinds right there. Those are my headwinds. Also, Biden's going to talk with Xi Zhang. No, I'm just kidding. He's going to go talk with Xi in China. We need a geopolitical deal here with OPEC, with China. We need a better deal. Unfortunately, he sucks at negotiating with other countries because he's not Trump, right? So he sucks at doing it. But if we can get a deal, then the market will be relieved because a lot of geopolitical risks are black swans. You can't even see them. They just come out of nowhere. So that's what I'm worried about. But I'm not like so concerned. AMD, oh yeah, we looked at AMD. AMD looks really primed. From a technical perspective, AMD from a technical perspective is bouncing. I don't think it's ready yet. But like, I mean, it's the more it sells off in this trend, and it has, look at AMD is a solid chip maker. They're second behind NVIDIA, arguably. AMD above 100, a hold above 100, a clear hold above 100, AMD's going higher. I like AMD. This is still a really good setup. Actually, this is something I do want to take a risk on. I need to do a little more research. I would take a risk inside of AMD also. Got that chips fiscal coming. So AMD, I like it. It's still wedging there. I mean, you got the RSI starting to pull up a little bit. The moving averages, it's mostly price action. This thing, oh, look at, there you go. There's some confirmation right off the 200 daily moving average, consolidated on it. So AMD consolidated off the 200 daily moving average. Maybe you look for a pullback in a hold of that previous resistance, which was what, 98, 99, right? Here you go. That was your previous resistance, somewhere between 99, really 100. You want to see it hold 100. AMD looks great though. I like that. I like AMD. Palantir, we just went over Palantir. Palantir looks good also. Palantir looks good also. Once it clears $16, it probably goes off to the races. But you want to see a pullback, I think, for Palantir. You want to see a really sharp pullback, enter that pullback. Support here, I'll throw it up here. My back is hurting, I'm not going to lie. I messed up my disc yesterday. So I only got a little bit more time. Got to go throw some therapy on here. 14, if it ever comes back to 14, I mean, that's a golden opportunity for an investment. For a trade, you want to be patient with Palantir for a trade. Palantir is a wild stock. It's pretty wild, but it looks good. Once it gets above this, it has a lot of contracts, has a lot of steam in it, right? So shout out to Amit. He has a lot of stuff on Palantir, but look at that. It looks really good. Palantir looks good. I'm looking at SPY calls expiring January 19th. Does that sound good or no? SPY calls. From this spot, I would say, yeah, that does look actually good. SPY calls, yeah. Yeah, I like SPY calls. SPY coming off the 200. Just know where your stop's at. I mean, just know exactly where your stop's at. Let's see what price action looks like at tomorrow. But you're giving it 3 months. You're going to give it 3 months. Even if it doesn't break to new highs, you still got the trend in your favor, right? You got it trending back up to the top of that channel. So I like that. I like that SPY calls. I've always thought about doing that more often instead of individual stocks, but SPY looks straight. Oh, sneak dissing Chi. No, he's cool. I mean, he's cool, but he's he's a Chi. He has a pretty cool backstory. Thoughts on Quant? Oh, you still, prayer kid, we have more downside to go. We could still have more. We got to make a lower high. Thoughts on Amazon? We already went through that. How much money you have in stocks? I'm not going to tell you how much money I have in stocks. That's just not an appropriate question, sir. Ask me my positions. You can see how much I have in what is it? You can go see how much I have inside of Chainlink. I actually have a video on that. The thumbnail is literally how much money I have in Chainlink right now. So you can go check that out on my YouTube. Intel is so undervalued. I'm thinking they might get a buy, working on something. Probably. Intel's, yeah, a lot of stuff is probably good. TSM. Oh yeah, TSM. Let's see, what does TSM look like? TSM, I don't know. It's under the 200. I don't know what's going on with TSM. It's under the 200 moving average daily. And it is, it looks like it is cocking back, getting ready to go. But do I like it more than AMD? I do not. It looks weird. But it is coming into that previous support here for TSM. Look at that. Nice little support. But I don't like TSM better than AMD for sure. I like AMD better. I even like NVIDIA better than TSM. INTC Intel. Intel is just like trending up. Intel doesn't look bad either. Probably goes higher. I don't know what they're doing, so I can't really say too much about it. And then we have Powell speaking. Where you buy point on Tesla? Where's my buy point on Tesla? For Tesla, I mean, you might want to look on the YouTube. There's not really a buying point exactly. You just want to see it hold 241. I think you want to see Tesla hold 241. If we go a little more in depth here, and it depends what you're looking at. What kind of trade are you talking of, right? Like, it's not a buy point, but I'd say the range for Tesla, you want it to hold 240, 241. You want it to hold 241. When it got beneath that, it's at risk of just really getting crushed. If it gets beneath 241 and it doesn't recover quickly, not great. Oh, Quant is a wannabe Chainlink? Oh, shoot. Okay. That's what Quant is? It's a wannabe Chainlink. My brother probably knows more about that. I have no clue what Quant is, to be honest with you. He knows all about Chainlink and interoperability and blockchains. Buy zone for Tesla. Yeah, the buy zone is right there. Let's see. But yeah, Tesla getting above 250 is very bullish. Once it gets above 250, very bullish. It could do that tomorrow. It could gap up. We'll see. This is a real scooping. Like, I watched so much Tesla price action. This is very bullish. You get this little cupping action, right? And then you get a trend. It could come right back down to 241 as long as it doesn't make a new low. If it doesn't make a new low, but it sharply pulls back, that to me is a signal to look for an entry for Tesla. I'm looking for the AM negativity tomorrow and then a pull back up somewhere for Tesla. So wannabe Chainlink. They claim they're working with Swift, but they have no proof. Quant. Sorry to crap on Quant. I don't know if it's, what it is. There's a lot of scams out there. I'll tell you that. There's just a lot of scams, so you want to be careful. Christine Martinez, yeah. And yeah, Chainlink. I would just stick with Chainlink. I wouldn't go after Quant. Don't go for those 100x returns. This token is doing this. You got to look for proof. Go read. I would say this. Go read Swift's actual paper, right? Their white paper. Go read Swift. Go read Citibank and go see if you see Quant in there. You're going to see Chainlink. You're not going to see. I'm thinking you don't see Quant anywhere. So you want to have evidence, or else it's just a pump and dump. I mean, everybody wants to be like Chainlink now. I think that's what's coming next, right? Right. Couple more comments, questions before we head in tomorrow. I got to go do some rehab here. So I'm sitting down, not standing up. I am a victim. No, I'm just kidding. You never be a victim. You know, if you hurt, if you're suffering, you're in pain, figure out how to fix it. Don't stop working hard. Don't give up. Don't play victim. There's always a way, a strategy to get better. There's always a way to come back. On semiconductor. Let's see. Ooh, On looks pretty good. I know Tom Lee was very bullish on, but I like that. I like that pullback right there for On. And you're right to be looking at semis because they're gonna have catalysts. So I like that. I like On. I mean, I would like to see On. I don't like the price action overall, but it tends to do this. Yeah, I don't really like the price action, but it tends to trend. So maybe above 95, 96. ON over 96. That looks pretty solid. Over 96. Yeah, On over 96. Football Legends. Over 96. It got rejected pretty hard there today. Over 96. Stop below 90. Maybe a hold under 90. So 90 to 96 looks like the zone for On. Big day tomorrow. All right. All right, guys, I'm out of here. Stay blessed. We'll catch you tomorrow again for another episode of What the Hell is the Fed Doing? And what is the market going to do? All right. Appreciate you guys again. As always, stay blessed. Get your diet, get your exercise, take care of yourselves. Thank you guys for joining. Shout out. Let me give you guys a shout out for staying on the stream as I try to build this YouTube, try to give you the information. Shout out to you guys. Shout out to you guys. Oh shoot, my bad. Dang it, man. I had the loop on, my bad. So cheers. Yeah, cheers to you guys again. I appreciate you guys supporting the channel. Don't forget to like and subscribe if you haven't already, and I'll catch you guys again tomorrow.